Good morning, welcome back. It's Yakov at TL Capital, licensed mortgage loan originator, NMLS ID 1017498. So let's explain and elaborate again on the 4 stages you're going to be going through when applying for a mortgage, and just so you understand the steps and where you stand throughout those 4 steps you're taking. So there's a pre-qualification, there is a pre-approval, there's a mortgage commitment, and then there's a clear to close. The short word for that is CTC, and that's where you want to stand when you shop for your home. You want to finally get a CTC status on your loan, where you can schedule a closing where you're 99% done besides signing the documents. So pre-qual basically means hypothetical numbers that you're providing to a loan officer, stating this is my credit, this is my income, this is my assets. Nothing has been viewed at, nothing has been verified. The mortgage broker just puts in the numbers and does a pre-qual. He sees what your debt to income ratio is, and you tell him the numbers from the house you're looking to buy, or the mortgage broker or loan officer will tell you what your magic number is, how much you can qualify for based on the hypothetical numbers you gave him. So that's really a pre-qual. That's nothing more than that. They didn't even run your credit, they didn't look at your credit, so that's the pre-qual. The next stage, which is stage 2, a little bit more advanced, is called the pre-approval. What is the pre-approval? Pre-approval, the mortgage broker or loan officer will do at least a hard pull on your credit reports so your credit is verified. They'll see how much trade lines you have, they'll see your credit history, they'll see your FICO scores, they'll get a credit score from 3 bureaus known as Equifax, Experian, or TransUnion, so it's a little bit more an advanced stage. Plus, again, the mortgage broker or loan officer will take you for your word on what you're telling him in terms of how much income you earn a year, not verified yet though, and how much assets you have set aside, also not verified though. A mortgage broker or loan officer is not allowed legally to ask you to provide those documents to him. However, you can offer to show this to your loan officer beforehand so he sees a clear picture. Now, if the mortgage broker or loan officer gets those numbers from you, he's going to run a decision with either DU or loan prospector, and they're going to say whether your loan is approved. They're going to list a list of conditions of what you need to provide in order to verify the information you gave the loan officer. So that's the next stage of a pre-approval. Third stage is where you go for underwriting, also known as initial risk review. The mortgage loan officer will collect all the data and information needed, IDs, income, assets. They're going to send it to an underwriter for initial risk review, and they're going to review your file. If they like the findings, they'll issue you a mortgage commitment. What does a mortgage commitment mean? So now you're into the third stage of the process. The mortgage commitment is where the underwriter had reviewed your documents, they already saw your income, they already saw your assets. Now, when they issue the commitment, they're going to have a list of conditions that you have to meet in order for the underwriter or lender or financial institution to clear your loan and get it into the closing stage. Once you provide all those documents, you're going to need also to do an appraisal most often. Sometimes, like I explained in my previous videos, you can get away with an appraisal if it's 75% loan to value. If it's 80%, sometimes on a single family, you can get away with an ACE or PDR. It's a limited appraisal report, not so expensive, not so much work involved. It's going to save you some money and some time, but they still do have to go down physical and inspect the place. You're going to have to get hazard insurance, and the property obviously will have to meet the value, the condition, habitable requirements. You need to have a working stove, fridge, utilities have to work, it needs to be functional, no defects, noticeable defects on the property. You can do an engineering inspection, but I'm not going to get into this now. I don't want to get carried away. Once you meet all those conditions, you're going to submit your file, or your loan officer will submit your file for final underwriter approval. And if everything finds to be satisfactory, the underwriter will issue you a CTC known as clear to close. Now get ready to close. Set a date to sign your closing docs, get the keys to your home, move in to your new home that you fell in love with, and hopefully you can enjoy it, and you're going to buy eventually a bigger home, and you're going to have an easy time paying off your mortgage, God willing. Thanks for watching. Like us on YouTube, if you have any questions, you need clarifications, we're always here to help. call us or DM us at 646-339-5358, 646-339-5358. I hope this helps you gain knowledge and information about what to expect when you purchase a home and or when you apply for a mortgage.